Thank you very much for joining us. It's a pleasure speaking to you. Do you feel that India could look a bit like an aberration given what's happening in the rest of the world?
I don't think so, because I think as you look at Asia, most countries in Asia are doing actually very well. China is growing, as we know. India, the growth rates in India are very strong, and certainly markets believe that the growth rates will sustain. I believe the government has put out a forecast of 9%, and most analysts are saying 8.5, 8.8 to 9%. So we're all in the same ballpark, and I think this is sustainable.
You think
obviously,
so?
Yeah. There are obviously clouds on the horizon, mainly coming from the West, Europe, and the sustainability of the US recovery. I think those will be two issues which need to be watched for. Because at the end of the day, Asia is very dependent, not just within itself, which is happening more and more, but it is also still dependent on the West.
Do you think at times many of the people who are chasing this story in the capital market context often forget that bit, because the kind of money that's coming into Asia, sometimes one wonders that is there too much of dependence on this story standing alone by itself?
Well, today Asia is providing good returns on investments, both on the market side, capital market side, debt, equity. So a lot of people in the West who are looking for returns are focused on Asia. So this money coming into Asia, again, there is a good reason for that. And it may well continue through 2011.
You are optimistic about that. I mean, despite the recent uncertainty that, if the US wasn't to grow at a level that would be at least acceptable, and Europe seems not going above 1.5, 1.7 at best, as a set of economies, you would still be bullish in 2011?
There's a lot of liquidity that is being created, as you know, in the West. And some of that liquidity is finding its way into Asia because the returns are higher in Asia. So if that liquidity continues, and if there isn't that much investment opportunity in the West, this may actually benefit from the liquidity.
What kind of returns do you anticipate that we could see? The kind of range that we're anticipating, at least for 2011. 2010 was pretty good, beat many expectations, right?
Yeah. Very hard to say. I think whether we can top 2010 or not, that again very much depend upon how the domestic economies perform. And I think if you see strong performance in the domestic economies, yes, you could get sustainable growth rates and therefore sustainable returns.
But the kind of money flow that's been coming in is expected to get accentuated with this quantitative easing part too. Do you think that we're still a little unsure about whether that money would really fuel itself into Asia, or is that a given?
If the quantitative, and this is the considered theory, that if the quantitative easing actually does achieve what the US Fed wants it to do, which is to stimulate the US economy, then obviously a lot of the liquidity will be used up in the West. If it doesn't, then the money has to go somewhere, and it's likely that some of that money will come towards Asia. And most central bankers today are watching very carefully to make sure that they just don't get a flood of liquidity coming from the West.
Because that is obviously a concern, right? I mean, that would also shake up the valuations that we're talking about in capital markets.
Well, it is a concern. Clearly, it'll put pressure on currencies, it'll put pressure on domestic interest rates. And of course, eventually, if there's so much money coming in, what kind of returns are people willing to accept? Maybe they'll accept even lower returns because it's going to be higher than what they're getting elsewhere.
In that sense, do you think that at times the India story in particular sometimes looks a bit inflated, because we came back so quickly that some people wanted to call it more euphoric as a return than a solid bounce back? Would you add that skepticism to it?
I think one thing that you have to remember about India is that it is a very large domestic economy. If you look at most Asian countries, they are very dependent on exports. And the percentage of domestic economy driven growth is a lot less than the percentage of export led growth. That's not the case with India. So India can be a self-sustaining growth story based on the very large market it has. Now, obviously, that has certain challenges. As one of them is inflation. The second one is, if oil prices start going up again, based on strong growth recovery in the United States as well as demand from Asian countries. That will then put even more pressure both on the balance of payments in India as well as prices. So yes, there's a good macro dynamics for India to do really well. There are also a few challenges ahead.
Though, do you agree with the theory that India as a market, if it is self-sustaining, as you just suggested, should start looking at itself as an expensive market and start accepting the idea that yes, we are doing well, our companies are performing, our economy is stable. In that sense, we will be an expensive market. We've got to live with the idea now.
I think, we are still a part of the Asian story, and a lot of our growth is driven not just by manufacturing but also services. Exactly how the price points will work is going to be an interesting discussion. But I think what you'll also find that some of the other Asian countries, including China, who have built their economies on the basis of low cost, are going to see costs increase. And if India's costs don't increase to the same extent, you may be looking at a different story as well. There's a lot of things that go in, a lot of variables which go into this equation.
Before I get down to talking a little more about the economy in particular, I want to ask you about the FII flows in terms of the trends that you see. Do you feel that the interest from foreign institutional investors is beginning to change within Asia? And in that respect, is India likely to outperform the Asia story yet again? 2010, we seem to have even beaten China.
Well, again, it'll all depend very much on how 2011 starts. If it starts as a very strong, robust global growth story, and India within that, then I think, yes, you will see continuing strong flows of FII investments. But I think if there is weakness or if there are concerns upfront, and there are obviously a few macro issues which could cause concerns, then you may well see not as robust growth, but you'll certainly see strong growth. So it's very difficult at this point in time, as we end 2010, to take a real crystal ball into 2011.
Sure. No, I understand, but what is worrying you the most as you look towards 2011? What would be your real red flags? Are they coming from Europe or are they coming from the US?
I think there are three things we are looking at. One is obviously growth rates in the West. At the end of the day, Asia is still very much dependent on the developed markets of Europe and United States. So that's one. And I think if we see continuing weakness in Europe and we don't see the same robust recovery that everybody's now forecasting, I think the most recent forecasts in the US economy are pretty strong, then that will have implications for Asia. So that's one. I think the second thing clearly is going to be inflation. That's the continuing theme, I would say, across Asia. India has been battling inflation. The Reserve Bank has been doing quite a lot to manage inflation. But you're now beginning to see that in China, in some of the other emerging Asian countries. And I would say inflation is going to be a major theme in Asia Pacific, which is very different from the West, where it is still, deflation risk in the West. And third thing I would say is just currencies.
Yeah.
How do the Asian economies manage currencies through 2011?